Oh man, so a huge dump on Bitcoin breaking down and getting rejected from a key level. Is $25,000 back on the cards here? Bitcoin has continued to show weakness. Yesterday, we spoke about the importance of Bitcoin starting to create higher highs. Unfortunately, as you can see here, Bitcoin faked out above this green line here. The green line sitting at 27,300 got thrown straight back to the downside here, and now 5 or 6 horrible 4-hourly candles pushing us to the downside. If we do not hold this level, we could see pain coming up in the charts. We're going to break that down and a lot more. Smash up likes. Don't forget to subscribe as always. If you're to buy any cryptocurrency, Bybit, links in the description, is the platform I use on a day-to-day basis. It is an affiliate link. It does support the channel. So much to cover off here, guys. First and foremost, we've got the atomic wallet exploit, which led to $35 million in losses, guys. Just a reminder for all of you guys, you have to, your first thing in crypto, before you try to make any money in trading or investing, you have to protect the money you do have in the first place, okay? It's all well and good you chasing a yield here and trying to make a profit here on a trade. If you're not preserving your capital, you're in for a world of pain. So you need to understand how to put it into cold storage where you are using wallets, how to protect them, how to diversify across different wallets, what are the different soft wallets and hot wallets. You've got to understand that. That's going to be your first education piece in crypto. So just a reminder for all of you guys, if you've been throughout this bear market and now suddenly you're one of the $35 million lost across, I believe it's over 1,000 people affected, 100 addresses affected, really sorry to hear that, but you've got to protect your crypto. You've got to protect your crypto. In other news, Gate.io threatens legal action against rumor mongers. Apparently, after the multi-chain issue, Gate.io was apparently facing some insolvency, so a lot of people started spreading rumors around that. Again, another message for you guys to protect your funds. We are not fully out of this bear market yet, so a lot of people started to get excited, and complacent is probably the right word. Always protect your funds. Critically important. We then have another headline, which is that apparently CZ is starting to get ready to step down from Binance. This would be huge. And I can see this affecting the markets as well. So you can see here, apparently they've moved position for this guy called Teng to a key role to apparently try groom him to take control of the positions that CZ holds. Now, I actually think this is a very smart move. Yes, markets might start to panic on the back of this because they want CZ to be in control of the world's biggest exchange. We've spoken about, Lems, how Binance is critical to the crypto infrastructure. They're by far the biggest on-ramp into crypto, the biggest exchange by a mile, right? Coinbase is a distant second, particularly after FTX's collapse. And so the markets will react to any weakness in Binance. But I think this is actually a strength. Remember, the US and the West have a hit piece of a campaign going after CZ. They don't like him. So it makes sense for him in certain regions, particularly for Binance.us, to take a back seat. Let somebody else, put somebody else at the front line, like this guy, Richard Teng. Put him in the front line. Let him be the figurehead that they go after. Somebody maybe with a completely clean track record, nothing to go after, somebody they can not really target as well. So I think this is okay. I don't think the market should read too much into this for now. The other important update we need to cover off today is Render. As we know, Render has done extremely well in this lovely upward trend here on the daily chart, and a lot of this has been to do with the excitement around the WWDC Apple conference. Yes, that is today on the 5th of June. Now, I've got a huge warning around this. Even though I'm a big fan of Render longer term, you've got to be very, very careful. I've seen this time and time again on long-term projects I hold, such as Phantom or any other project, where you see that there's excitement in the lead up to an event, and then there could be a dub. This could be a buy the rumor, sell the news event. Now, if you want to trade it, if you are experienced, and take advantage of the trade, that's absolutely fine. There will be volatility. Expect some movement in the hours leading up to the WWDC event. But then don't be surprised to see that call off as traders start to take profit and exit their positions. If you're a long-term holder, nothing to worry about. Just avoid the green candles. Wait for a dump. If you see a nice price point you like, you top it up. But if you're trading, be very, very careful. Jumping back into the charts, guys, this is what we're frustrated with, right? We need to understand, what is this journey we've been on? We were in the symmetrical triangle, faked out to the upside, broke down to the downside, held support at the bottom of the symmetrical triangle, so 26.2. We then rallied all the way up to the top of the wedge of the triangle, right? So we came to the bottom, then we went all the way to the top here, which is where we got rejected at around 28,300. Then we came down, managed to create a higher low, right? We bounced at 26.6. This is good because that's higher than 26.2 where my cursor is. So this is good. That's a higher low. But then we got rejected from the first level here at 27,300 and we're just getting thrown straight to the downside. This is disappointing here. This is showing that the bulls are lacking the momentum. The debt ceiling deal has gone through. Markets actually responding quite positively to the non-farm payrolls, which we spoke about on Friday. But I did mention in my weekly TA roundup, which by the way, if you haven't seen, then make sure you're on my Twitter at RealIjaz1. Every Sunday, I post a weekly TA roundup of all the key things and what I'm expecting for this week ahead as well. Make sure you go check that out. I'll leave that in the description to at RealIjaz1. When you take a look at these key levels, what you'll then understand is that we wanted Bitcoin to build some momentum. We had to go and eventually break through. If I zoom out here and just clear off some of the lines, we ultimately need to break this level at 31, right? And look at the journey that we're on. Look at where we're failing. We're failing here at 27,500. Not only did we get rejected from here at 28,400, we've got resistance there at 29 and then 30 where my cursor is now and then 31. So Bitcoin is just proving that it's in the deep downward trend. And that is what we've been monitoring here on this downward channel. But if you look at this downward channel, we've not even managed to get to the upside of this downward channel. If you just look at this downward channel, who is in control? It's the bears, right? We can't be in this false land of thinking that the bulls are showing strength right now. No, they're not, right? At least when we're in this downward channel where we're moving to the top of the channel, that's one thing. But now we bounce off the bottom of the channel. We don't even go to the top of the channel. We fall down. We bounce again. We don't even reach this peak here. We collapse again. So we're showing a lot of weakness now. Now, the fortunate thing we have on our side is that markets are shrugging off a lot of the negative things right now. Like we spoke about the PCE coming in hot. We spoke about the jolts coming in hot. We spoke about the non-farm payrolls. Completely surprising with so many new jobs created. But markets, for some reason, in the traditional market front, are kind of ignoring them. You can even see the headline here. Stock markets are ignoring a laundry list of risks. Yeah, they are. For some reason, it looks like markets just want to try to come off its bottom, particularly in traditional finance. Now, the issue we're seeing here with Bitcoin is that Bitcoin not shown enough strength yet. And the longer we consolidate in this downward channel, the less likely it is that we actually play out the cup and handle pattern which we're monitoring. Okay, so what we want to see here from this cup and handle pattern is we need to break out from this cup and handle pattern and go past our neckline, then perhaps get a retest before then moving on to break out our cup and handle pattern. Remember, the price target of this cup and handle pattern brings you to 45,300. So it's a huge reversal pattern. But right now, the bulls and the bears are at stalemate. If we take a look at the dollar index as well, always important to check in on the dollar index. It's opened up Monday here in the green. That is despite a really bad end to the week on the dollar index. You can see here 2 green days in a row here. The one on Friday, they had a decent rally, and now Monday looking to recover some of its gains. If we bring out the EMA ribbon, you can see exactly what's going on. Right? Like we said, we needed to see this situation. We needed to see us flip the EMA ribbon and send the dollar index in this direction, but we're not managing that. Instead, the opposite has happened. The dollar index has just consolidated, bounced from its EMA ribbon and looking to move to the upside to create a higher high. Now, the problem is if the EMA ribbon does that, what does that then mean for Bitcoin? It means Bitcoin's going to get rejected from its daily EMA ribbon. And that's what we're seeing right now. This is not a good look. Look at that horrible red candlestick getting rejected from the EMA ribbon on Bitcoin. That's not good. We needed to get above the EMA ribbon and move to the upside. So then when you zoom out and you look at the weekly chart, you start to see the pattern that's emerging. And the pattern that's emerging now is we're setting ourselves up for another red week. And if we have another red week, not only are we going to get closer to our weekly candle, but it shows that what we saw 2 weeks ago, this green candle, which was a 4.9% move, was not a bounce fully from the EMA ribbon, right? We were hoping that when we came down, this wick on this candle was the final retest of the EMA ribbon, but in order for that to happen, we had to go break through 30 and 31. We've not done that. And now we've shown weakness in the charts. So now the best hopes that I shared in my TA article, which you have to read, is that the market has kind of 2 options. If the bulls are not ready to play out the cup and handle pattern, it's got 2 options. And the first option is if the bears can take control and push us below the EMA ribbon. Right? And they can take control of a bear market, put us back in that bear market territory, threaten lower levels like 24 and 23 and even 20. Or we could be heading in sideways territory. We could be heading for a long period of confusion, of volatility, where the market's just going up and just going down and losing its EMA ribbon, then regaining the EMA ribbon, then losing it again. So that's what I'm preparing for here in this market. Again, if you want to know some of the hidden factors around the $1.6 trillion liquidity crunch we're going to be facing over this next couple of weeks, you're going to have to watch this video here. I'll also link up a video for you to watch the nitty-gritty of how to trade these volatile markets. Thanks for watching, and I'll see you in the next one.